What's up YouTube? My name is Jack, and in this video I'm going to talk about the different ways that you can invest your money. Alright, I'm going to go over some of my favorite ways, and by no means is this a list of all the different ways that you can invest. There are a ton of different options out there, but again, I'm going to go over some of my favorite ways, how to get started in those, and what I like and dislike about each of these strategies. So if that's something you're interested in, let's get started. If you're not aware of this already, one of the worst things you can do is just have a lot of money sitting in a checking account where your money's not working for you. Therefore that money's not making you any money by sitting there. And that's because of the rate of inflation. All right. So let me give you an example. Let's just say you have $100,000 sitting in a checking account. And let's say the inflation rate is 3%, which is being nice because it's been a lot higher than that lately. That means at the end of the year, essentially your $100,000 is going to be worth $97,000. So therefore you just lost $3,000 by letting that money just sit in a checking account. All right, and that's because things get more expensive with time. Now, a lot of people might think that investing is risky, and maybe that's what's stopping you from doing it. But I'm here to tell you that there are a bunch of different ways to invest that are super conservative, where you might not be making a ton of money, but again, there's no risk involved, and you can still allow your money to make you money. So with that being said, you need to decide what kind of investor you want to be. Are you someone that likes to take on a higher risk with that chance to make a higher reward? Or are you more of a conservative investor where you really don't want to stress about it, you just want to make a little bit of money? So here are some of my favorite that I would recommend, and it's going from being super conservative to very safe to high risk, high reward. All right, number one on the list, and that is a high yield savings account. I know, super simple, you've probably already heard of it, but if you don't do anything else, please go get a high yield savings account and put your money in there if you haven't done so already. All right, what I like about these, they're offering 5% interest per year on your money. I mean, it doesn't get much easier than that. So in other words, if you have $100,000 in one of these accounts, you'll make $5,000 by the end of the year. Actually more, because most of them are compounding interest, so you get paid out every month and then you get paid interest on that interest. Besides that, I like how they're super conservative. There's absolutely no risk involved. You can keep your money in there for as little or as long as you want. So if you need it, pull it out, penalty free, super simple. What I don't like about it is, it's a high yield savings account and the rates are high right now, but these aren't guaranteed forever. For example, I've had my money in one where I was getting paid 5.26%, all right? And then after about 6 or 7 months, I think it dropped to about 4.75%. So these can change. And one reason why they're so high currently is because the Fed rates, the interest rates are so high. So when the Feds decide that they're gonna start lowering rates, this could affect the yields on the high yield savings account and the amount of money they're paying out. But until then, this is a no-brainer and something to take advantage of. So when it comes to opening up a high yield savings account, super simple. You could probably go to any big bank, but the biggest thing is just research what their yields are, because some of these banks, like Bank of America, for example, I have a checking account with, but they don't offer anything hardly if you invest your money in a high yield savings account with them, compared to some of these other banks that offer a lot more. So do your research on that. What I would recommend is downloading the app Raisin, and from there, you create an account with them, and they are affiliated with tons of different banks that are FDIC insured up to $250,000, so it's super safe, and you literally can just scroll through all the offers that they have and find the bank that's offering the most money. What I like about this is that if down the road, the bank that you have your money with starts lowering their yields, right, but another bank's offering more money, you can simply withdraw your money from the bank that it's in and put it into the new offer without creating a new account, without giving your social security and going through that whole process again. Next on the list are treasury bills, another conservative, no risk type of investment. All right, so you can't go wrong with these. A treasury bill is just a short-term debt obligation that's backed by the government. Okay, so you can literally go on to treasurydirect.gov and check out all the different treasury bills that they offer. They usually come in notes that are a year and less, so 3 months, 6 months, or a year. And ideally you want to choose the term that you're most comfortable with, meaning if you put $100,000 in a treasury bill for a year, then you don't really plan on needing that money anytime soon. That gives it time to mature. The cool thing about these is when you lock in that rate, it doesn't change on you. Unlike the high yield savings account, those rates can literally change on you daily. But when you lock in a treasury bill for a year, let's say at 5.25%, that rate stays the same. Regardless of what happens to the market, Treasury bills, tomorrow could go down and only be worth 4%. You still have that 5% locked in. So that's one thing I like about it. What I don't like about it is that your money is locked up in these and you can't just easily access it like you could with a high yield savings account. Here's the website, treasurydirect.gov. You will come to this website and you will create your own account if you don't already have one. And then once you are logged in, next to my account, you will see a button that says Buy Direct. You will click that and it will take you to a list of the available securities there are to purchase. For the purpose of this video, we are talking about the Treasury bills. So you would click that one and you would go down to the bottom of the screen and hit Submit. And that will take you to the next screen, which will be the list of all the available Treasury bills there are to purchase and the auction date in which they are available to purchase. If you don't have an account with Treasury Direct, you can still come to the website and come here to auctions and then go down to recent auctions, all right, and then today's auctions, and then up here, announcements, data, and results. And that will take you to a list of all the most recent auctions that have went through. So I like this because you can see which rates of return were given for each term, whether it's 4 weeks, 8 weeks, 17 weeks. And I know I mentioned that one reason why I didn't like these is because your money is locked up for the whole term until it matures before you get paid out on the interest. But they are pretty flexible in a sense where there's different terms. And that's why I specifically like Treasury bills, because you do have these options, pretty much anything under 1 year. Okay, now there are other options, as I mentioned, to purchase on here. You have, notes and bonds, but you can see 10 years, 3 years, 20 years, 30 years. They're a lot longer term. And that's the only reason why I didn't really mention them and why I personally do not like them. If a better opportunity comes, I want to be able to take my money out and go take advantage of that opportunity. All right, moving on. For this next one, we're going to get a little bit more creative, and that's investing into a life insurance policy, specifically an IUL or Index Universal Life Insurance. A couple of reasons why I love these. First of all, I like to refer to these as a 401k on steroids. It's more of a long-term strategy, right? But unlike a 401k where you're penalized if you take out money, you do actually have an option to take out a portion of the money invested into one of these policies before you retire without penalty, okay? Another thing that I love about them, because it's tied to a life insurance policy under some certain tax code, all the money that you earn in interest is tax-free. In other words, if you invest $100,000 into one of these policies and by the time you go to start withdrawing from it, it's at $300,000, all right? You just made $200,000, right? That is all tax-free money. Tons and tons of savings. Could you only imagine if you really went all out on one of these and you had 5, 6, 700, $1 million of tax-free money? A ton of savings there. Now, what I don't like about them is that they are a little bit more long-term thinking, and there are fees associated with them, okay? So you have the premium for life insurance, obviously, that you have to pay, and then as you're putting money into the account and building them, there is a fee that you're paying each time you deposit money. And so to get started with one of these, you literally just go find a licensed life insurance agent. The purpose for this video is not for me to do a deep dive into each of these strategies, but more or less to give you an idea of what's out there so you can do more research and look into them yourself. Moving on to the next investment, and that is real estate. Probably another no-brainer, right? But this is where a lot of millionaires have been made, and that's by investing into real estate. What I love about it is that it's a great way to hedge against inflation. I mean, think about it. If you owned a house before this huge spike in home prices came, guess what? You're sitting on a ton of equity. The inflation that happened does not affect you as much. On top of that, there's tax benefits. So all the interest that you're paying per month is deductible against your taxable income. This can save you thousands of dollars at the end of the year. Not to mention, every payment that you make, some of that's going towards your principal. I like to refer to that as like a forced savings account. You're going to be paying money for rent regardless, right? And 100% of that is interest. It just goes nowhere. So why not be putting money into something that's actually, building up a savings for you and has the benefit to possibly appreciate in the future and has tax benefits. So what I don't like about investing in real estate, there's not much to not like, but with the high interest rates right now and the high home prices, it is pretty unaffordable, okay? And if you're gonna be living paycheck to paycheck and your quality of life is gonna be destroyed, to purchase a home just so you can make that payment, then I don't recommend it. I don't think it's the best decision at that point. Also, this is a long-term investment, so you wanna make sure that you're willing to live in this home for, 5, 6, 7, 10 years, because this is one thing that we do know, regardless of what happens to the real estate market, whether it goes up or down tomorrow, we do know in the long run, home prices tend to go up, and history shows that. All right, moving on to my last investment strategy, and that is investing into the stock market. This is one of the top ways to invest, all right? And it can also be one of the most riskiest as well, so keep that in mind. If you're not aware what the stock market is, you can essentially invest in thousands and thousands of different companies, from big ones that you've heard of before, like Apple, Microsoft, Google, Amazon, or startup companies that you've probably never heard of before, okay? Now the difference is, if you invest in a startup and they end up blasting off, then guess what? You're probably making a lot of money. Vice versa, a lot of these startups fail. This is kind of where you can decide what your risk tolerance is when you're investing yourself. Obviously, when you're investing in companies like Apple and Microsoft and Meta, like these stocks tend to always go up, right? They're very strong stocks. Even if they go down, they're bound to recover eventually. Now, you can go out and find a professional to manage a portfolio and an account for you. You just pretty much give them your money, you pay them a small fee, and they'll do all the investments for you. You can let them know as well what your risk tolerance is, as we talked about earlier. So whether you want to be conservative or you want to be more risky, okay? So this is where, typically a professional is probably gonna get you around 10% a year, but that's not guaranteed, okay? When you're investing in the stock market, you never know when there's gonna be a big upturn or a big downturn, and that's kind of where the risk comes from. But again, there are ways to invest to where if something bad did happen, you're not as exposed. And again, this just really goes back to your risk tolerance, all right? But if you're someone that really enjoys the stock market, right? You enjoy analyzing different companies and reading charts and technical analysis, and you like to be more hands-on, then investing in the stock market yourself can be extremely lucrative, okay? The amount of money that you can make in it, there is no cap. But again, with higher risk comes higher reward. But again, not only could you make a lot of money, you could also lose a ton of money. So you gotta keep that in mind. And if you have absolutely no experience in the stock market, I highly recommend not just jumping right into it, okay? Do your research, learn, start small. Start with some of these other investments that we talked about, so at least you're making some type of money while you're learning. All right, so what I like about this strategy is that the upside is so much more than any of the other strategies. Also, I personally enjoy, reading charts and doing fundamental analysis on companies and researching different companies to invest in. This is something that I just enjoy and I'm passionate about, and it's another thing I like about this strategy personally. But this isn't going to be the case for everyone. By no means is investing in the stock market an easy task. What I dislike about it is that the risk is a lot higher. Nothing is guaranteed in the stock market. With higher risk comes higher rewards, but this can be very stressful and emotionally draining at times. And those are things that I don't really like about this strategy. But you really got to find out what kind of investor you are, okay? And this, if anything, is something to work up to. And probably for another video, but there are a ton of different strategies, when it comes to the type of investor that you're gonna be within the stock market. Whether you're gonna be a long-term investor, a short-term, a day trader, and with each one of those strategies comes more or less risk as well, right? And the types of companies you decide to invest in and so on. Another dislike too is, especially if you're a long-term investor, right? And you put your money into a company and it ends up, doing worse than what you expected, then guess what? Now, you're at an unrealized loss on that stock that you invested in. Therefore, if you need the money, right, it's not as liquid. I mean, obviously you can take the money out, but not without taking a loss. So I know a lot of people that, have maybe wanted to buy a house, but all their money's tied up in the stock market and, they're down on a lot of their positions, right? And so they really don't feel, comfortable taking a big loss to go purchase a home or take advantage of another investment. So that's another disadvantage is, like most investments, you have to have more of a long-term outlook. So how do you get started investing in the stock market? Super simple. Either one, you go find a professional to do it for you, and this can be at any big bank or big brokerage. Literally just call them up and tell them you want to open up an investment account, and they'll talk to you about everything. Or if you want to do the investing yourself, then you just simply go and open up a brokerage account. All right, and there are a ton out there. You have Charles Schwab's Thinkorswim platform, you have E-Trades, you have Robinhood, you have Webull, which is one of my personal favorites. I mean, the list goes on. There are a ton of different brokerages out there, and most of them are going to be personal preference, or until you find out what your trading style is, then a certain brokerage might suit you better than others. But if you are thinking about opening up your own brokerage account, the one that I would recommend going with is opening up a Webull cash account. All right, and the reason why I say this is because they'll offer you 5% on the money that you're not investing. So if you're just getting started and you're learning how to invest, you can just go ahead, open up an account, get familiar with the platform, do your research, maybe place some small trades, right? But the best thing is that you're still making money on your money while you're not using it. Not only that, I truly do love their platform. I love how easy it is to place trades. I love their black theme that they have. I mean, it looks super slick. It's super user friendly. They have a ton of different indicators. I love their charts. I mean, this is my favorite platform to trade on, at least as of now, because they're always changing, okay? But I'll leave the link in the description below to sign up for Webull if that's something that you're interested in, and also to the treasurydirect.gov website and the Raisin app that I mentioned to you as well. That's all I have for you guys in this one. I hope you found some value in this video, and I'll see you guys in the next one.